Understanding how lenders and creditors think when they are deciding on doing business with you as a borrower is extremely important. My entire channel, you will hear me repeatedly talk about lender psychology. When it comes to hard inquiries, you have to understand that lenders and creditors are using this metric. This is a part of your calculation of your credit score in the first place because it is a determinant of how desperate you might be for credit, how risky you are. They are taking this information when they look at your financial profile, when they look at all those data points they collect for an application, they're comparing it to experiences that they've had and that overall data collected from other lender experiences that they have access to. They're putting those data points in comparison to those who have been successful borrowers that have been low risk versus those who have been unsuccessful borrowers and have been high risk and have cost them money or cost other lenders money. They're comparing those data points. Having a bunch of hard inquiries has been a major indicator of a borrower who is in financially hard times or being erratic or something of the sort. There's a reasoning why they use this metric to gauge in or against your favor when you're applying for credit. Now, some lenders and some banks and institutions are going to be what they call inquiry sensitive, and some aren't going to be. You can have different lenders that, for whatever reasons, will look at more data points more in depth and weigh those heavier than having a bunch of inquiries and still approve you for credit, maybe even approve you for high limits. Some, on the other hand, are not willing to take that same choice if they don't have to. So if that's the case, you need to understand the lender that you're dealing with. Overall, I'd say when you're starting to talk about trying to scale up to in-depth levels of personal credit, graduating out and extrapolating to business credit, you have to seriously consider a balance between thickening your profile and consistently applying for quality credit that you can actually use and being reasonable at the scale that you go for that credit. So some financial gurus and professionals and YouTubers out there are gonna, tell you how they apply for dozens of different credit accounts in small spurts of time. Some, on the other hand, are gonna tell you how you need to be very methodical. You need to, 1 or 2 accounts a year is great. You have to start figuring out what you're going for when you're looking to expand your credit profile and who you're looking to do business with. And it gets nuanced, it takes work, but this is where you have to determine where you stand overall with your finances, how important personal credit is to your developmental journey along the way to financial freedom or financial stability, whatever your goal is. Because if you are looking to develop your credit just for something like purchasing your first car or your next car, or just getting into the credit card game and getting approved for your first credit card, developing credit to buy your first home or primary residence, if you're on the surface level for what you need your credit for, then you're going to be on a totally different trajectory than somebody who is striving to literally build, businesses and scale out large scale investments and using and leveraging their personal and business credit to do so. 2 totally different roadmaps. If you're conservatively looking to just get, your first home, or you're looking to get your first car, then you are going to be somebody who most likely will not need to apply for a lot of credit at one time. You're not going to need a ton of accounts on your report to generate a strong score, to generate a thick enough profile, to do these entry level, different forms of borrowing. When you start to get more in depth, you're looking for high limit credit cards, a bunch of them. You're looking for personal lines of credit, business lines of credit, business funding, real estate funding. When you're starting to get into that aspect of things, that's a different story. Because now you need to show a bunch of experience, you need to show a bunch of competency with your credit profile, but you also need to still look like you're doing it in a sustainable way. So that means that you're not just erratically going out and applying for a bunch of different credit at the same time, but you also still need to have a thick enough profile, diverse enough profile for these more complex loans and these other lenders and creditors that are in these more niche spaces to feel comfortable doing business with you. So you need to understand that hard inquiries are a very important part. Even though it's only 10% of most scoring models, hard inquiries are a very strong indicator of what kind of borrower you might be and what kind of risk you might be to that lender. It's very important that you understand what you're going for and how to go about it. And understand the concept of gardening, understanding the concept of you're going to pull for multiple different, credit accounts at one time, stacking them per bureau, things of this nature. You're going to have to start doing homework. You got to start digging deeper. And if you're not willing to do that kind of work, then you have to understand that and function financially at which the scale you're willing to do your homework and the work you're willing to put in. You have to match that up. Because if you're not willing to do the work and you think you're going to go out here and chase all of these high-limit credit cards and chase these business lines of credit and all this other fancy stuff that gets promoted on the internet, then you are sadly mistaken if you think you're not going to get your hand bit off. Because at the end of the day, again, you have to show competency on your credit report. It's not just, oh, you need this many accounts, oh, you need this, you need that. You have to show competency. You have to show a rhythm. You have to show symmetry on your credit report, and you have to do it in an efficient manner in order to scale up with the big boys and start borrowing real high limit credit cards and lines of credit and things of this nature. Big banks, strong commercial lenders and other creditors. When you start to get into this game on that level, you have to balance out, your hard inquiries, who you're getting credit from, how it's being used. It's so nuanced, it's so detailed. And this video is intended to literally focus on your psychology so you can start putting in the effort and the work that you need to put in to demonstrate and prove yourself to these lenders who are going to be fine-tooth combing through your finances to gauge your risk level. And so you can have a better streak at success sooner than having to bump your head or fail altogether because you didn't go into it with the right mindset. So keep in mind that you have to understand how your counterpart, which in this case is going to be banks and lenders, are thinking, what they're looking for, how they're functioning. You have to understand all of that before you just jump out here and start pursuing all this different credit and functioning in an uncalibrated kind of way that lenders are going to be able to look on paper and see, or look on an application and see, and close the door on you before you even get started. So I appreciate y'all for tuning in. I know this was valuable for you. I enjoy bringing you this content. I want all my pioneers out there to prosper. I want you to continue to scale up your personal credit because there's no better financial tool to build wealth in this country than credit. So use it to your advantage, understand the psychology, and put it to work. Thank y'all for tuning in. As always, I want y'all to stay focused, stay in motion. See y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.